The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. From the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. We're going to start the show just a little differently this time. What we're going to do is we're going to take a look at the Dow Jones Industrial Average. Uh-oh, have a technical problem here. Shut the front door and raise the rent. Doggone it. We got to figure this out here. What's wrong? Doggone it, doggone it, doggone it. Oh, shut the front door and raise the rent. Okay, let's just move on here. I'm getting an echo and I can't change the, I'll have to log off at the break. But I wanted to start the show today with the Dow Jones Industrial Average overnight, folks. We hit the exact 78% level. We've already rallied 200 points off that bottom. It happened a few hours ago. And because we're right on the full moon today, my assumption is we're probably in the midst of a pretty good rally. It looks like we're still in a bit of a bear market, but that's what we'll be looking at. We also saw one of our favorite people here in the den from the Upper East Side basically told us that we had a divergence in the NASDAQ, where the NASDAQ was making a little bit higher. It was making the 61% retracement. As I'm unable to mute the sound. The function does not work. I don't know what's wrong, but it just does not work. I don't know what's wrong. Not to worry about it. I'll get it. I'll get it fixed. Let me see. Turning down the speakers. Maybe that will help. Most of you want me to turn them off anyway. I don't know. Can you hear me? Is it okay now? Is the sound still okay in the den? I don't know if it is or not. You'll have to tell me. Good, good. As long as it's all right, we're fine. I'll get this fixed at the break, but we'll take a look at the. Just 1 second here. We'll take a look at the E-mini S&P here because this is what's happened to us. This was as of about 3 or 4 hours ago. We went down and made a slightly lower low below the 78% retracement and snapped back really quickly. When we made that low, that's when the Dow Jones was making its 78% retracement and the NASDAQ was making its 61% retracement. So I'm assuming we're going to get a pretty good rally today. That's my assumption. Remember, that's what it is. One of the questions that I received this morning is about rates of return. You know, what do you expect? Boy, that's really a tough question because everybody is different. Our business of trading is such a mental game that once you master the 9-inch cycle from ear to ear, you know, it basically you can have all kinds of things open to you. I can tell you this: the best I ever did in these markets, and I've been doing it for a long time. Remember, I started, you know, way back in the early '60s and got involved in silver, and then when I went to work at Drexel Burnham in '76. You know, I had a tremendous run from '76 through '82, where basically I was long gold from '76 into January of 1980, and then went to the short side. And I had 6 years in a row at Drexel where I did 100% a year. I still keep the papers on that because I'd never had a run like that ever before. If you stop and think if you could make 100% a year in about 15 years, you'd own the world. Well, I gave a lot of the world back, but I've still been able to do okay. What I try to shoot for, folks, is realistically about 3 or 4% a month, because if you're going to trade, you figure that you'll be right about 6 times out of 10. Using pattern recognition, the way we look at it, you should be right about 6 times out of 10. You'll have probably 2 or 3 losses and a couple of break-evens in those 4 trades that don't work. But the key to it is managing your risk. It's all about risk control. It's not how much money you make. It's how much money you have to put at risk, and that's the main thing to worry about. The problem that many people have is they get involved in something and they think it's real easy, like getting long Apple and riding it for 200 or 300 points, or Google for 1,000 points, whatever it happens to be, and they think it's very easy. Well, it's easy during that time frame, but over a long period of time, things are going to change, and you have to be able to change your strategy as the markets change a little bit. So we're having greater volatility now, so you have to change your strategy. And what I try to do is to move down to a 30-minute chart, to quantify your risk. That was what I was showing you there in the S&P, and then also in the Dow Jones chart, which comes from someone across the pond who trades the Dow index and also the DAX index. But with the full moon we have today, we should have a bounce. Whether it's going to be a 2 or 3 day bounce or maybe no bounce at all I know is we hit some key numbers, just like we hit them on the top on Monday. Here it is Thursday, and we hit them on the bottom side. So this is all about pattern recognition. It's not about what the trend is or anything like that. There's a big difference between trading the trend and trading the patterns. So keep in mind that that's a big thing. But the way I view this, it's basically I'm in a business of buying and selling. Every day when I walk in, I look up on my shelves there, and some days I have soybeans and corn up there that I want to get rid of, and then there's other days when I come in and I see packages that are being delivered where I want to be buying wheat or corn or things like that. And that's how I view it. It's just like a haberdashery business where I want to have so many pieces of clothing. I'm doing the same thing as I'm looking at these foreign exchange contracts that I look at, and the major currencies that I look at too. I hope that helps, but that's really what it's all about. There's very few books written about this. You'll read about it, and when you read a trader's diary of things that he did and how he traded, and there's some really good ones out there. And I think you should always try to remember that that's really what you're trying to do. You don't want to mimic anybody else either. You want to be your own. You want to be your own trader. You got to prove it to yourself that you're able to do this, and then you're able to see that that's what we're what we're going. So let's keep in mind that that's what we're looking at. So it that's the best I can do as far as how that works. And reading books like Jesse Livermore, and there was another guy. Oh, what was his name? He wrote a book about, it was The Bull Trap, or oh shucks, it was really good. He's down in Miami. He's a gold trader. I can't remember his name. I'll go to my library and look at it tomorrow. But that's another really good book about picking out how you trade and stuff like that. Because that's how you learn, is you learn from it. And watching that. Oh, you know what? I'm going to post in here. There's Norm Winsky gave us a video. One of you guys in the room already has it. I'll let you do it because I'm real busy. Put that trader thing from WLS in Chicago in there about how the trading pits worked. I think you folks will really enjoy that. There's a really great link. It's called The Trading Something or Other, and I watched it. It's about 30 minutes and explains trading and the out trades and the risks that were involved in trading in the pit. All that stuff doesn't make any difference anymore, folks, because with electronic trading, you have your own seat on the exchange. You're trading just like we did in the pits with no risk. There's no out trade risk. That's it. It's WLS AM Stereo 890, and that's where it comes from. But I know one of the guys in the room here, because I send it to everybody, will have that, and you'll be able to take a look at it. If you don't, I'll post it tomorrow. You know what? I might just post it today. I'll post it today. Give me a break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to talk here about the gold market. We've got a question from someone regarding the trade. Yeah. The soybean oil, we still like that. The stop would be at break even. It's got a profit in it, but we're over this full moon. We might get a little bit of a pullback. If we get out at break even, we're going to buy it back a couple days later, probably into early next week. But we still like the soybean oil long term, and it's still working, so we'll just leave it like it is to see what's going on. We're long the VIX index. It's been working. And what do we have? One other position that's working really well, and I can't remember what it was, but I'll think of it in a minute possibly and take a look at it. Let's take a look at what's going on with the gold market, folks. We've been waiting for this to come down here. You'll notice we'll bring this up here today. You'll take a look here in the gold market. We had that potential triple top up there, and this could be huge, folks. We might not stop here at $1,300. We're trading at $1,306, I believe, right now. And there's a possibility that we could break below that, but there's a couple of numbers there that should give it some support, plus the old highs that we had, back in November. The key is the silver is what I've been watching, and of course we think silver's got a chance to get below, it's not too far away from the $16 an ounce level. And below that, we're hoping we could get a really massive sell-off down to around that 15.10, 15.20 level in silver. That's the one that we'd really like to see. But we're in this full moon now, and this as we know that 14-day cycle that we have in that lunar cycle works really well. So I'd be willing to look for a spot to try to buy the gold down in here. Right now, I don't see any reason to, because I'd still be waiting for that 13, at least to touch 1302 or go just a little bit below 1300. Then I would look at it. Silver's now, taking out those old lows, so we're getting ready to see some things, coming in on the downside that would look, really interesting if we get it to that point. If you remember yesterday, we had a question about the euro, and I wanted to bring that up because this is what our game plan was in the euro, and so far it's lined up just about perfectly. you'll notice that this low that we have hit the 61% retracement. We are within a heartbeat of that. Let me double check. We might even have hit it. We did it. We hit it exactly right on the money at 21. The low was 2163, and the number we were looking at was 2164. So that pattern in the euro hit spot on, and that might be the because the euro and the gold have such a high correlation. I would think that would be pretty good. So if you want a really low risk trade here, and believe me, this is about as low risk as you can get, is try to buy the gold around that 1308 level, and risk about $3. That's all you'd have to risk, because if it holds, it should be okay. But you're trading a contract that's worth $130,000, and you're only risking $300. You don't get any smaller risk than that. And if you look at the British pound, we've also hit a really beautiful Gartley in the British pound. I think we can bring this one up to let you folks see it here. I don't know how it'll post in the den, but we'll take a quick look at it here, so we'll be able to see it hopefully. And you'll see we're seeing a whole bunch of these happening, and that means there's big things happening in the U.S. dollar would be my guess, because it all runs together. And we'll keep a pretty close eye. By the way, folks, we've now switched from the March to the June contract in the Treasury bond. So we're now trading June bonds. They're trading around the 43.15 level. By the way, those of you that have been out here to visit me in Tucson, and I know a lot of you have, we always go out to dinner with our good friend Kelly Henryon, who's our neighbor here. Kelly turned 94 today, folks. He's still going strong. His mind is as sharp as a tack. Body's slowing down a bit, but he's still doing really well. And he wanted to say hello to all the folks in here that we always go out to the same Mexican restaurant here in Tucson, along with the steak place that we like. But he did want to send his regards on. We all wish him a happy birthday. He was married to the same woman for 66 years. She passed away 2 years ago at 92, and they didn't have any children. But you talk about God making some class human beings. Kelly Henryon is certainly one of those. Anyway, let's move on to a couple other things that we really need to talk about. This is a really key day for the stock market, because if we fail today, folks, and fail badly, this is going to be extremely, extremely bearish, because this is just a normal 3-day correction, coming off that 78% high that we made on Monday. And so if this full moon doesn't hold it, that tells us that we're looking at some, pretty good probabilities of a really big ABCD that would get it moving to the downside. We'll see. We have a question about the dollar index going higher. Yes, I still believe the dollar index has got a chance to go a lot higher, but this is a real key time here in the dollar index, because we're right at that 61% retracement in the euro. We're at the 61% retracement in the British pound. The Japanese yen doing the same thing. All of this is telling us that the dollar index is having some trouble up in the 90-100 level. So that's really what we're looking at. So we want to keep an eye on that, very, very closely to see what's going on, with that as we watch it unfold. But today is going to be a really key day, because if the euro fails and the gold fails and the stock market fails, that tells us that we're going down probably for a whole nother leg down, which would not be a good thing to happen, with the things going on in all these markets coming together at the same time. And that's all they are, is patterns, folks. I don't know diddly squat about the fundamentals or anything like that. So it's not really making any difference of what's going on. So we'll see if that's going on. Anyway, that phone call I'll be able to take a little bit later. I never get any phone calls during the show unless it's a family call, and so I'll cover that. It's my sister calling, no big deal. All right, let's talk a little bit about the silver long term. And I really think this is the one that if we get this, folks, this is going to be mother, God, and country here, because it's got a real chance here of getting down into this area of $15. We talked about it yesterday. I want to continue talking about it until it either doesn't work or it happens, because we don't see big patterns like this, happening, very, very often. We can see a smaller pattern happening here. This is the same pattern on a smaller time frame. This happens to be the Treasury bonds, and as you can see here, we've had this bounce in the Treasury bonds. We've already, rallied 2.5 handles from that level. So it's just a pattern. It's just a 3-drive pattern, but it has a high probability. And when you're looking at this pattern, the main thing that you must do is you got to examine all of the swings and making sure that the amount of time down in each of the swings starts to become equal, because what that means is it's telling you that there's harmony in that market. And people that don't look at technical analysis, really closely, they don't see that. They just see lines on a chart, but they don't see the beautiful mathematics and things that are staring you in the face. And if you look at some of these numbers and how they, this doesn't happen by accident, folks. Remember what Albert Einstein said. He said, God does not roll dice with the universe. And he said, before God was numbers. So let's keep watching this stuff. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've put a graph here that we got from our good friend Bill Meridian from Cycles Research over there in Vienna, Austria. Bill has gone back to 1987, and looked at the number of times the market's had these big declines. And if you'll notice, he's got it from a 1-day return, a 1-year return, 3 years later, 5 years later, 10 years later. Look at those 1-year, 3-year, 5-year, and 10-year retracement, folks. This is the time when America is really growing. And I'm not going to say it's stopping here, but you don't want to mess with Mother Nature. This has been a long-term thing, because we could react 60% from here and still be higher 5 years out. So we're just getting greater volatility is what we're looking at here. But you'll notice this chart is basically showing you, the inherent bias that's been here because we've been in such a strong trend. The big crash of 1987, when it occurred, back on October 19th, 1987, that was a perfect, to the exact tick, 61% retracement of the low from 1982 when the Dow hit 1,600 and something, and now it's trading at 25,000. 10 years down the road, it might be trading at, 45,000. We don't know that. No one else does either. And what we're trying to do here is we look at the patterns. That's what we're looking at. We're watching patterns to form to give us possibilities for a trade, and that's all it is. And nothing more than that. You can't put any fundamental analysis behind it because you can't. The one good thing about the pattern recognition is that they can't hide from you. If prices are going up, there's more buyers. If prices are going down, there's more sellers. And that's the real key to remember. Just remember that's just all about probabilities. There's nothing more, nothing less. What we're looking at here. So pay attention to that because, it's very, 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 very important. I wanted to bring this chart up because we talked about this yesterday on the show because someone asked a question about it, and that is the Dow Jones, because we were having in the midst of this sell-off. And we brought this up to bring it to your attention here. You can see here again, we hit that exact 78% retracement this morning. We started the show showing you it on a smaller time frame, but there it is. And so we're at really key levels. If we get below that 24,000 level, folks, or 24,300, that's not going to be a good sign because a major support down here, and it is held up really well. So you want to be able to pay close attention to it. Okay, I wanted to give me 1 second here. I wanted to see how the market, I love to see how the market reacts early in the morning because this first few minutes you get a lot of big swings, and that's what we're looking at. We'll take a look at this gold here because we were watching it. The pullback that we're looking at on the gold, because we got up to 1312. We're right there right now, 1308. So if you buy gold here at 1308, I'd put a stop at 1306. You only have to risk $2 on a $100,000, $130,000 contract. It'll either work or it won't. Well, that's really saying something, isn't it? In other words, it'll either go up or down, which it probably will. But 1308 is the 61% retracement. 1307 is the 78% retracement. So if you put your stop at 1306, you're risking $200 and a contract worth $130,800. So that's the way that it looks right now. As far as the S&P, we believe we're going to get a pretty good rally today, at least up another 13 handles from where we are right now, up around that 2730 level. And if we get above 2740, then we got a chance for something even greater to have happen. Regarding the crude oil, we've been mentioning that crude oil had a really strong probability of going lower, mainly because of what was happening in the heating oil market, because we had made such a big 3-drive pattern. We'll put this up so you can take a look at it. And this was as of Friday, and we did hit the 61% retracement in the heating oil on Tuesday, and it's come down quite a bit. So we went right up to that 61% retracement, and now we've backed off, and we're still moving down. There should be some pretty strong support at around $60 a barrel in spot crude. Failing that, then you'll be looking at something that could be, a great deal less. Someone's asked a silly question. The question is, who was the most beautiful movie star that I ever saw during my time in California? And it was tied. Both of my daughters, Jill and Lauren, theirs were the two most beautiful. However, if you wanted to go into the movie star, it was Bo Derek I happened to be at farmer's market one day picking up some fruit for the kids, and she was there with her husband, John Derrick, and just wearing a baseball cap and Levi's and stuff. And boy, she's really stunning. That's and also Robert Wagner's wife, Joe St. John, is another one that was she stopped traffic. And then one other one was Vince Edwards' ex-wife, Kathy Kirsch. She played on the Beverly Hillbillies. She was really another. Those are the three that probably I can remember the most, but who knows? I was more interested in which horse was running at Santa Anita than I was where the movie stars were. So anyway, who knows? We'll see what happens. By the way, folks, we're coming up to the Kentucky Derby. We'll be able to have the winner for you again this year, the first Saturday in May. So save your pennies. We're going to be having another wonderful parlay bet. All right, let's move on here to the next question that someone has, and that is Apple. Apple has been up around this 175 level. I see no indication. We've had a couple of reversal days here at the 176 level in Apple, but there's really not a pattern in Apple that I would say is really clear-cut for a potential sale, because it's gone up. Same thing with the Google, and especially with Amazon. The same thing. These do not have patterns that lead to low risk. And what I try to focus on is the low risk part. I'm interested in how much money I have to risk, not how much money I can possibly make. Perfect example is the gold trade. I don't know if the gold trade is going to work, but I'm willing to risk $200 to see if it's going to work. And that's all I have to risk. I mean, where can you buy something for $130,000, $800 and only risk $200 on it? That's just you just can't see it. You just have to wait and see. But we'll wait and see. Anyway, we'll keep an eye on this as we go through. Someone's asked a question about the natural gas. Here again, I'll use the words of my good friend Jim Twentyman: defy human nature and do the work yourself, because natural gas is making a really nice Gartley pattern as we speak. Take a look at that one, just like what's happening. Well, the gold pattern is a pullback pattern. It's not like the Gartley pattern, the natural gas. The natural gas is a much better pattern because you have three numbers coming together at the same time, giving you an even greater probability. With the gold trade, you're just buying a retracement and hoping that this full moon is going to work. And, hope is a terrible trading word. And so you've got to be able to, to define what your risk is going to be to do what's working. Just remember, because if we have natural gas data coming out today. Thank you very much, Terry. That's always a big kick in the pants. So be really careful of that. I would wait until that data came out, because it's like, trading into a non-farm payroll number. There's just not a lot of liquidity at that, and you can really get reamed on those stops, and you don't want to have that. So I would definitely wait on that natural gas, because even though the pattern is complete, with that report there, it makes it a little more difficult to trade it. Okay, we'll be back, folks, and I want to bring up the chart of Apple and talk about that in just a bit. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're going to take a look here at Apple on a weekly basis. What I'd like for you to do is to look at the chart back in 2013. You'll notice that we were completing a perfect ABCD Gartley pattern exactly at the 78% level of the low from 2011. And from there, we went from $60 a share up to $177, but I believe it split a couple times during that time, so it's hard to say what the actual price was. But what we're looking at now, you can see here we made new highs this week, and the $64 question is that going to be a double top? It is certainly a hanging man. Let's try that again, a shooting star. And so we will know more about that, because if Apple closes really badly this week, this is going to be a really big shooting star pattern, and that would tell us that we most probably did make a double top in Apple at this point. But right now, I believe it's way too early to make that determination. There's just no way that you really can do that. So you can do it anytime you want, but that's neither here nor there. So bear with me here 1 second, as all my beepers are going off right now, and that is, let's just see what's going on. It is the it's the Dow Jones touching that 78% level. So watch that very closely here, because it might give up the ghost here, boys and girls. The Euro's back to that 61% retracement. This is the time, that first hour of trading. That's the toughest time in the morning to trading. So you want to be able to, to handle your risks the most at that particular time, and that's what you're looking at. It looks like the gold trade, it's out about 80 cents right now, 90 cents, $1. So looks like $2 is on the way, and I'll be going to the McDonald's to get my second job in later this afternoon to make up for that $200 loss if it occurs. But I don't watch it, so I just wanted to see what the market's doing right now. What we're doing right now is making a pullback in some of these indices, and whether it's going to hold this level. This is the opening, what they call amateur hour, that first hour of trading. And believe me, folks, that opening price is so important. I'm going to be doing a special webinar pretty soon about this opening price. I've got some great data that I've been working on with John Jameson, that proves the importance of it and how to handle it, and it's really very, very interesting. So we want to keep a close eye on that as we go through the things that we're watching this morning. So we'll watch it as it unfolds, but this is amateur hour, so pay attention. That extends all the way to the first hour of trading, folks, between 9:30 and 10:30. After 10:30, it settles down, and then you have a better idea of what you're looking at. So pay attention to that because it can be very, very important. I have to turn off a limit minder here in the Dow Jones. I just want to double check to make sure my data was set correctly, because sometimes I get mixed up here in the middle of the night. I want to be sure that it's there. It hit it spot on. That nothing has changed. It went all it's doing is going down and retesting that overnight low. If we get below 24,800 in the Dow Jones Z-Mini, then there's trouble in River City. But right now, it's just retesting it, just like the S&P's retesting the 2705. So that's how I look at it. I could be, totally wrong, but we'll not worry about that as we go through. But we're at real critical times here with this euro setting at the 121.60 level. And the stock indices where they are, it could go either way, no question about it, as we start to look at this as we unfold it today. One other question that someone has asked me about is yes, there is really a fact that the amateur hour is that first hour of trading. And the reason why people put their orders in before they go to work, and also these people that run hedge funds, because they don't have any skin in the game, they put their orders in right in the first hour of trading. They want to be in the market or out of the market, and that's when they put their orders in. And I can prove to you that the opening price is by far the most important price of the day, but there's a certain thing that you have to be aware of, and that is the opening on one thing is not necessarily the opening on the other. In other words, the opening price for the euro could be at 8 o'clock UK time, but the opening price for the British pound might not be till 9 o'clock UK time. You have to be able to go and statistically look at what those numbers are, and to do that, you've got to do a great deal of research, and you have to have the data to do it. And that's why it's, so it's very important to, really look at it. So just keep in mind that that's my opinion of it. But I know that the opening price does work, because I've seen it work enough that it does have some pretty good, really, well, it works. I mean, it just helps you reduce the risk. I will tell you this about the opening price, folks. If you have a position on, let's say you're 2 hours into the day, and you're day trading, and if you're long and you're below the opening price, the odds of you winning on that trade is less than 30%. But if you're short and you're below the opening price, the odds of you winning is better than 70%. So if you have a position on and you're not sure what to do, which that happens a lot, look at the opening price. If you're below the opening and you're long, the odds are against you. If you're below the opening and you're short, the odds are in your favor. So if you're in the direction of the open, in other words, you're long and you're above the opening price, you've got a really good chance of still making money. But if you're against that, the odds are, believe me, those are really great statistics, folks. I wouldn't fade that for a minute. I think that would be very, very foolish to do that. But I hope that it helps, and we'll see what's going on. Anyway. That's the original work on that was done by Earl Haddady and Jim Sibbett way back in the 1960s. They had an office in Pasadena in the same building that one of my mentors, Dave Nelson, and Oscar McClure had an office there. And then, of course, I had John Hill help me out of Hendersonville, North Carolina. Those were my three main mentors. And then in 1986, Dr. Ruth Miller started to mentor me on the astrology. So those were my four major mentors that said what is going on. So we'll see. We'll watch that as we unfold. But like Jim Twentyman says, defy human nature. Prove it to yourself. Go look at the opening price and go back and look at your trades and see how we'll see what's going. This doesn't make any difference if you're Marshall's asking a question about the PM session or the AM session. If you're trading foreign exchange or these different markets, you have to realize that the close in the afternoon is going to be the opening of Asia. Okay, so you've got to check that. So I only trade the U.S. markets. I don't like to trade Europe. And I don't like to trade Asia, but in the morning when I'm trading foreign exchange, the very first thing I do is I check the opening prices of the 6 major cross rates in the UK, and all of them have a different opening time. And so that's the main thing. 9:30 a.m. is the time for the New York Stock Exchange Open. That's what you should look at. But because they have this off-hours trading in some of these stocks, it's very difficult. So you've got to use the opening price at 9:30 in the morning. That's when the volume comes into the market, folks. Many of these trades for the stocks, it might show 10,000 shares, but that'll show 1 million shares when it opens in the morning. We trade probably 5 million shares of Intel in the first hour today. I don't know how much the volume on Intel is this morning, but it's probably in the millions is my guess. And I remember 1965 in San Luis Obispo, California, I met Ross Perot, and that day the Dow Jones had a record volume of 5 million shares that day. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the market. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've posted some information from Bill Meridian. By the way, the folks that we have as our guests here, we have Stan Harley, Bill Meridian, Arch Crawford, Kerry Szymanski. It's just been a whole group of people, and all of them have been either winners or finishing in the top 5 in timing for Timers Digest. So we're lucky to have their information. But Bill sent us along what he's looking for March. If you'll notice in the S&P, he's looking for a major turning point on March 2nd. That's one day from today. Also on the 9th, the 14th, and 27th. In the NASDAQ, he's looking for key dates on March 6th, 12th, and 23rd. So why don't you folks keep a close eye on those and see how well they turn out. so that we can use that information in the future. So, he does a lot of great mathematical and astrology work, so let's pay close attention to it, and we'll pay as much attention as we can to it. But mainly, it's about how much money you have to risk, not how much money you're going to make. So take a quick look at this. Keep in mind here, if we get down to this 2790 in this S&P, that's completing a really nice ABCD pattern on the 15-minute chart, which is a good chart to trade if you're trading, especially in the hey, it's not nice to fool Mother Nature, David. Anyway, it's to be a really nice ABCD pattern down there that should have good support at 2690 in the E-mini S&P. So we'll watch that one very, very close. So live every day in an attitude of gratitude, and may God bless. Next week, I hope to have Tim Boast out of Florida as our guest for astrology, which should be pretty good, and we'll have a pretty good idea of what's going on with this full moon by the end of the close tomorrow. We're in a down week in the starting of the month, and that's very unusual to be down the first 2 or 3 days of the month. That's usually a very bearish sign, so you got to remember that. It's quite important, I would think. So I'll cut a slice of birthday cake today for Kelly, and live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!